Hello and welcome to the weekend update. Today is 31st of December. You're looking at a daily chart of S&P 500. So let's just see what we see the pattern developing. You can see that I have a channel drawn right here. The midpoint of the channel is right here, and you can see that S&P 500 has been consolidating just above the midpoint. You can see that it's got a bear flag look to it, this pattern, but it's consolidating just above the midpoint. If you look at the weekly chart, you'll see that over the last couple of weeks, you can see that the candles is an indecision candle for the last 2 weeks. So I'll just go back to so what it's doing is just consolidating. It's basically waiting for some event which is going to decide which way it wants to go. If I bring in the moving averages, you'll notice that I'll just hide some of the drawings. So if you look at the moving averages, you'll see that there are two moving averages here. Orange one is the 50 EMA. The green one is the 20 EMA. They've now crossed and they started to move lower. And it's now the price is consolidating just below the moving averages. So the moving averages will act as a dynamic resistance. So based on what we see at the moment, it is quite clear that the chart pattern is bearish. You can see that it's a bear flag consolidation. This consolidation is happening below the daily 20 and 50 EMA. If you look at the momentum indicators, MACD is moving lower. It has crossed below the zero line. RSI is, this green line is the RSI 50. It's below the RSI 50 level, which is negative. So there's nothing, so the technical picture definitely is negative. But as I said, on a weekly basis, if you look at it, it has printed two indecision candle. So let's discuss what could now get this market out of this consolidation. And I think that will happen most likely next Friday. So if we look at the economic calendar next Friday, so this is the Friday 6th of June, what's happening? We're going to get non-farm payroll figures for the month of December. What is the market expecting? Consensus is 200,000. So the market is expecting economy to add 200,000 non-farm jobs. Last month, the economy added 263,000 jobs. The unemployment rate is expected to remain unchanged. The consensus is at 3.7. Last month was 3.7. So the unemployment rate is not expected to change much. What else is going to be important? This is a key one. Average hourly earnings year over year. It's expected to grow at a rate of 5%. Last month, the average hourly earnings grew at an annual rate of 5.1%. Why is this report going to be key? It's going to be key because Fed Chairman Powell said that one of the indicators he's looking for is wage inflation to come down. So if you look at this chart right here, you will see that this shows average hourly earnings. This is wage inflation. It's showing that wages have been going up at over 5% since October of 2021. Right here, hourly wages have been going up at over 5% per year. Fed Chairman Powell thinks that's too high. Wages shouldn't be going up more than 2%. So he wants to see this come down. So that's why this report is very important. If this report comes in hotter than expected, meaning if we see that the economy had added more than 200,000 jobs, or if average hourly earnings grew at over 5%, market may not like it. And at that time, I think this market is going to sell off to the downside. And that's when I think S&P 500 is going to break below this midpoint, which is where it's been consolidating. But if, on the other hand, the report comes in weaker than market is expecting, So let's say the economy adds less than 200,000 jobs, say 100,000, or if the unemployment rate goes up from 3.7, which is what the market expecting, to say 3.8, and if average hourly earnings, which the market is expecting will grow at an annual rate of 5%, comes in below, then I think there is, possibility of some rebound. So I think this report is going to be very, very important next Friday, and it will it will basically decide which way the market goes. So if the market doesn't like the report, as I said, this midpoint is very important. If S&P 500 breaks below this midpoint and there is price acceptance in the lower half of this channel, then I think it exposes the bottom of the channel right here, which basically would be the October lows. If on the other hand report comes in friendly to the market, so our resistance here is around 39.10. If it's able to take out 39.10, then it could very well move to the top of the channel. So I think this is now at an important level, at the middle of the channel. You break the channel, it exposes the bottom of the channel. You move to the upside and take out 3900, then the top of the channel comes into play. If we look at SPY, the corresponding figures are, so if this level is breached, say 370, 376, then the bottom of the channel, now it's not going to fall all the way to the bottom right away. It can gradually move lower. But as long as we see price acceptance in the bottom half, you can see that SPY spent a lot of time on the upper half of this channel. So if it breaks to the downside, the measured move will project a price target to the bottom, which is around 348. But on the other hand, if 390 gets taken out because the report is friendly to the market, then we have to be open to the possibility of a move to the upper end of the channel, which is around 410. So I think the next Friday's report is going to be very important. If we look at NASDAQ, just to see what's going on in NASDAQ, so you'll see I've got a channel right here, two channels actually. The blue channels is where it's sitting. It's at the bottom of this blue channel, the blue lines. So if we break to the downside, then this brown channel comes into play, and that would project a price target of 10,000 or below, because NASDAQ is at 10,900 right now. So if it breaks to the downside, then it could very well move to the bottom of this channel, which is basically below 10,000, 10,000, 9,008, 9,000, depending upon when it gets there, because you see it's sloping down. So depending upon when it gets there, the value will change, but it will be 10,000 or less. But if on the other hand the reaction is positive, then obviously we would expect to see a bounce. The initial resistance would be around 11,500, and then this top of the channel comes into play. So for QQQ, the corresponding levels are, so the bottom of the channel, depending upon when it gets there, would be around 243, 244, and if it's able to get through the midpoint, and then resistance would be around 281, and then finally to the top of the channel. So I think next week's report is very, very important. The other thing that I want to bring to your attention is on QQQ. So this is a weekly chart of QQQ. You can see that it's beginning to form a falling wedge pattern. Now, obviously, it can still fall, and as I mentioned, that if it goes to the bottom of the channel right here, it would bring us to somewhere around here, which is around 240. So this channel still has a little bit of room to the downside. So if QQQ were to fall to around 240, it would be coming to a level where we'd have to basically, the space is going to get smaller and smaller in this falling wedge. So I think we want to keep an eye on this falling wedge. It doesn't suggest that we're going to break out to the upside now, even if it can still fall maybe another 10% or so before it reaches towards the bottom end of this channel. But I just wanted to bring to your attention that we're seeing a falling wedge pattern developing in QQQ. So I'll come back to the daily. So that's basically what I see happening in the in SPY and QQQ. If I look at IWM, IWM has this channel. You can see that it has already fallen below the midpoint. It also has this bear flag consolidation pattern right now. So you can see that it's doing this. So if it breaks to the downside, I would expect it to fall to the lower end of this channel, and that will basically bring us to the June low, slightly below the June low, to 162. So there's a lot at stake in the market, but at the moment the technical setups are all bearish. But Friday's jobs report will decide whether or not we actually get a break to the downside, or whether this bearish pattern is going to be invalidated and move to the upside. So I think we should wait and see what happens on Friday. Now, what's happening in other markets? So if we look at the rates, what are the rates telling us? So if I look at the Fed funds futures for June 2023, I do see that it's at 4.97. The yield is at 4.97. So the market is expecting Federal Reserve to increase interest rate to around 5%. But that will change next Friday. If the jobs report comes in stronger than expected, then this can easily move above 5% towards 525 or even 550, depending upon how strong the labor market is. But if the report is weaker than expected, then we could see it come back towards the 475 level. So the market wouldn't be expecting Federal Reserve to increase interest rate above 5%. So again, these yields will react next Friday. If you look at the 10-year, so the 10-year has been, not this one, the 10-year has been moving higher over the last month or so. So it's now coming up towards the top end of this channel. So I think we're going to get a reaction. So, top of the channel right now is about 395. So I think all of these is coinciding with some kind of a reaction on Friday. So if it wants to pull back on Friday, okay, fine. Or if it wants to break out to the upside from this key resistance, then we would see, yields back up over 4%. So you can see that, all the yields and the stock markets are all reaching some important support and resistance levels. And depending upon the reaction on Friday, next Friday, this one will either break out to the upside or pull back and move lower. If we look at the spread between the 10 and 2, this spread has started to come down. The spread was as high as 84 basis points. Now it's around 55 basis points. So I think we'll see some kind of a reaction on the yields next Friday. What's happening to dollar? So the dollar has been moving lower. You can see, if I show you the weekly chart, you'll see that here's the weekly. So you can see that it has now closed below the weekly 50. But look at the momentum indicators. MACD continues to move lower, and it's now crossing below the zero line. This is not good. If it crosses below the zero line, this is not good. If you look at the weekly RSI, weekly RSI is now well below the 50 level. This is the green line, 50. So this is looking bearish. The momentum is weak, and that's why you're seeing the prices are coming down. Now it's oversold. You can see RSI is reaching an oversold level, but on a weekly basis, the technical picture does not look good. It's pointing to further weakness. So which means that this should be positive for gold, and that's basically what we've been seeing, is that gold has been generally moving higher. and I have a channel right here. Gold is now at the top of this channel. So are we going to get a push above this channel, or are we going to get rejection from this channel? And we might get some reaction next Friday. I think gold might remain kind of choppy until next Friday. And next Friday, depending upon what happens in the labor market, if yields, if dollar rebounds from the jobs report, then gold could fall. Or if dollar continues to weaken, then gold could break out to the upside of this channel. So I think we will see some kind of reaction in gold next Friday also, whether it breaks to the upside or whether it breaks to the downside. I want to next look at the S&P 500 sectors just to see what the sectors are saying. So this is XLK. This is the largest S&P 500 sector. You can see it's now near the bottom of this channel. Again, if let's say it breaks to the downside, then obviously it's going to put downward pressure on S&P 500. On the other hand, if it reacts positively to the jobs report, then S&P 500, this is going to put upside pressure on S&P 500. But at the moment, this is looking weak. It's fallen, but oversold. Don't get me, I do want to point out to the fact that, markets are oversold. So there would be, there would be room for a bounce. But if the reaction is, but the bounce doesn't mean that we go all the way to the top. I think, the jobs report will basically give us further clue as to whether or not we get a small bounce or a large bounce, or whether we get small decline or a large decline. If the job market is strong, then I would expect move to be to the downside. And the downside target would be to this bottom of this channel. Upside would be, initial resistance would be to this line right here, which is around 125, and then beyond that to the top of the channel. So all depends on next Friday. If we look at XLV, which is the second largest, so I've got a channel right here. You can see that the consolidation is bearish, because you can see it has the look of a bear flag pattern. So again, if the bear flag works out and it breaks to the downside, expect S&P 500 to fall. But if on the other hand we get a push to the upside, then obviously it's going to help S&P 500. But at the moment the pattern is bearish. If we look at XLF, which is financials, so again this also has a bearish looking pattern. So you can see bear flag pattern. So if it plays out, if the bear flag pattern plays out and it breaks to the downside, you can see it bounced off the midpoint of this channel couple of times already. So there are buyers right here. So if it breaks below this midpoint, then it exposes the bottom of this channel. So again, a break to the downside is going to put downside pressure. But if it's able to get back above this resistance, then it should put upside pressure on S&P 500. Now anything below this level is gonna form a lower high. So just to keep just to be aware of that. XLY, this is another one which has been, now this is discretionary. Now one thing I do want to say is that this has been this made a new low, but two of the biggest stock in this sector is Amazon and Tesla. If you look at the, so this is discretionary. If you look at the if you look at the holding Amazon and Tesla, between the two they form almost 40% of this index. So that's why this decline right here is primarily due to, but if you look at the discretionary sectors in general, you'll see that it's not as weak. The XLY, because 40% of the XLY is made up of Amazon and Tesla, and those two stocks have been under a lot of pressure this month. That's why you're seeing XLY form a new low. It has fallen below the, but other indexes haven't. So I just want to mention that. If I look at XLB, again, XLB also has a bearish looking pattern. This is a bear flag pattern. So if it breaks to the downside, expect downside pressure on S&P 500. This is XLI. Again, that also has a bear flag pattern. Again, it breaks to the downside, then expect. So the point I'm trying to make is that even if you look at the sectors, you will see the pattern is negative. So the pattern is generally negative, and I think the market is looking for some kind of a catalyst for this bearish pattern to carry out, and that would be the jobs report. But we shouldn't assume that the job report is going to be stronger than expected. It could, because the job market has been very, very strong. So if it does and the reaction is negative, then this bear flag pattern would play out, and S&P 500 would be would break the S&P 500 would break the support, this support right here, which has been consolidating at the midpoint of this channel. So we'll leave it at this. Thank you very much for watching the video.